Hi everyone. Today we are in conversation with CA Pramod Jain. Welcome. And we would be talking about Union Budget 2024. There are a lot of questions, but this video is dedicated on buyback of shares. So we'll try to touch upon few topics, have some questions and answers from you, sir. So is there exactly any change in the buyback of shares, or it's exactly what was happening earlier?
Uh, Thank you, Parasi. Namaste to all. In fact, there is a change proposed in this Union Budget 2024. Earlier, the buyback of shares was tax free in the hands of the shareholders, and the company who made the buyback, they used to pay the tax at the rate of 20%. Now there is a proposal, and it would be now taxable in the hands of the shareholders as dividend under section 2 subsection 22. A clause has been added, clause F, which is any amount received from the buyback of shares that would be taxable as dividend in the hands of the shareholders, with effect from, in fact, 1st of October 2024.
Okay, all right. And there's another question like, what is the difference between reduction of shares versus buyback of shares?
Paraji, many people feel that reduction of shares and buyback of shares are one and the same thing, but technically no. If I talk about the Companies Act, the reduction of shares is provided under Section 66 of the Companies Act, where the company needs to go to the NCLT. But in case of buyback of shares, certain percentages below 10% reduction, then the board passes the resolution and the buyback can be done. But it is beyond 10% but less than 25%, then through the shareholders AGM, then the buyback is required to be done.
Okay, okay. There's another question around the declaration of dividend. So, whenever we declare dividend, is it only from profits or it is another story?
Again, very good question, because now this buyback would be taxable as a dividend. And if I talk about dividend distribution, if I talk about under the Companies Act section 123, dividend can be declared only out of accumulated profits or profits during the year. But now here, the total amount which would be received on a buyback would be taxable as dividend, deemed dividend under section 222F. Now suppose a shareholder purchased a share for rupees 100, and the company makes a buyback of 200 rupees, then the shareholder would be receiving the whole 200 rupees. So that 200 rupees would be taxable as his dividend income.
Oh,
And then
okay.
that dividend would be taxable as per his applicable slab rates. If it is company, so it would be either 25%, 22% or 25%. If it is a partnership firm or LLP, then 30%. If it is the individual, then his slab rate. So according to that, it would be taxable, the whole amount.
Okay. And as per the Companies Act, like what all can be the sources for doing a buyback?
Under the Companies Act, because section 2 subsection 22F, the proposed one says that any amount received as a buyback as per section 68 of the Companies Act. So section 68 of the Companies Act provides that a buyback company can buy back its shares subject to other conditions out of three resources. First is out of fresh share capital issued for this purpose. Second is a securities premium, and third is accumulated profit. So a company can buy back a share from its fresh issue as well as securities premium. If I talk about other sections of section 2 subsection 22, which defines dividend, section 2 is for the definition. So even for the reduction of capital, they say it would be dividend, deemed dividend under section 2 subsection 22D, to the extent it is of the from the accumulated profits. So section 2 subsection 22E also says any loan and advances that would be given to a shareholder exceeding holding certain percentages, 10 and above, and other conditions, to the extent of the accumulated profit, But in this case, they say any amount. So as I said, an example, the total amount of 200 would be treated as a deemed dividend, which as per the Companies Act is not out of accumulated profits, but it could be out of securities premium also. And in fact, if I talk about the memorandum explaining this amendment says that dividend and buyback of shares are basically treated as dividend distribution of the accumulated reserves. But the buyback may not be out of the accumulated profit, it could be from the securities premium.
Okay, okay, that's really helpful. And I think this is everyone's interest area. Like, what will be my cost of acquisition, or how it will be affected in case of a buyback?
No, here if I talk about as we took an example of 100 rupees my cost, I got the deemed dividend, I got the buyback of 200 rupees. So my 200 rupees will be full amount of deemed dividend, the dividend, 222F. But there is a section, there is section 46A, which talks about such buyback of shares. And for that purpose, earlier there was section 115QA. Now that would not be applicable in effect from 1st October 2024 because that section had that the company would be paying taxes, so that would not be required, and the exemption which was given in section that would not be required. But here 46A says that in case of buyback of shares, your consideration would be treated as nil. So in this case, my consideration was 200, so consideration would be 0, my cost would be 100. So there would be a loss of 100 rupees. So this capital loss of 100 rupees would be adjusted against any capital gain during the year or any capital gain in the next 8 years. Okay. So it can be adjusted. It could have been that if to the extent of my gain that would have been made taxable, that would have been more appropriate, but they have proposed to treat it that pay full tax, and whether or not you have a gain in the future years, your cost, the loss that would be carried forward, you can take the benefit later on. So this could be some issues for certain shareholders who are not holding other investments. There could be a capital gain. So one, they pay full tax on the total amount received, and the cost they are not getting the benefit, which per se, as per the memorandum, may not be the intent. Maybe some change could be there when the final budget comes. Maybe.
Okay. This was really helpful to understand around buyback of shares. I hope people can ask you questions on the comment section if there are any further questions on buyback.
Thank you. Thank you, everyone.
Thank you so much.